Now for a more closer watch on the markets, our market master of the day joins in, Jyoti Jaipuria, Head of Research, Bank of America, Merrill Lynch. Good morning, Jyoti. Good to have you with us.
Good morning. Hi.
The first question, and perhaps a tough one. How much more legs for this rally in 2014? We just had Adrian Moat telling us that he wouldn't be surprised if there was 20% more gains, which means an 8,000 target for the Nifty in 2014 itself. What is your heart telling you?
Yeah, there are many factors which will play out, but we've printed in our report that we could see a 10% plus move in the markets by the end of this year. So that's really what we've been looking at for this year.
Okay. Well, sectorally, how do you play this market, Jyoti? We have seen this big 60% move come in Bank Nifty from the September lows. Is this going to be, this next 10% will continue to be led by the Bank Nifty, you think?
Yeah, I guess what happens is we get quite caught up in the last few months' performances. So if you see the last 3-4 years, what you've seen is software, pharmaceutical, probably consumers. Some of these sectors have done remarkably well relative to a lot of the domestic sectors. So the next 6 months we'll probably see that reversal happening where people are well positioned in these sectors. They want to take a bit of money away from these sectors and get into more domestic sectors. So that's the trend we'll keep witnessing, and that's why the big move is going to come probably in the sectors which have not done well so far. Now not everything will participate. Everything will have different levels of participation and different levels of move. But broadly, that's the trend we are forecasting.
Okay. Jyoti, hi, good morning, and thanks for being with us on the show this morning. If there is a BJP-led NDA government that comes into power, do you see a further re-rating of the Indian markets?
Our view is if we get a stable government which is in a position to do reforms, then whatever the party which forms it, we will see a re-rating this year. So this year a lot of the rally in the market will probably be led by re-rating because the earnings trajectory, the GDP growth trajectory can't change in the next 4-5 months. It is probably a next year story where we'll start seeing growth changing, earnings changing. But this year the market will go up in anticipation of all that happening. So a lot of the returns will probably be led by re-rating.
Okay. Your note says high quality cyclicals. What would you call a high quality cyclical in the Nifty, for instance?
Yeah, so some of the sectors which we are focusing on, since we can't really talk on stocks, is auto's been one component which we like, banks is the other segment which we like. So it's sectors like this, and within each sector there's probably the high quality and the lower quality. We think both will perform. So probably at some point lower quality may do better than higher quality, but it's the easy one is the high quality, something which everybody can buy in a big way, and we also recommend some exposure actually to low quality stocks.
And what is your expectation from earnings season this time around?
So we are looking at earnings growth being around 13%, which is more or less similar to what we've seen in the last 2 quarters. The last quarter was actually 20, and the quarter before that was 13. But the overall trend is still the same. There's a lot of concentration in earnings coming from the international subsidiaries and from software and pharma. So if you look at these 3 segments, they together account for nearly 3/4 of the earnings growth we are seeing.
But this quarter, will there be continued disappointments from, say, public sector banks and other cyclical stocks? If that were to happen, will the market weather them in the anticipation that this is already discounted? They are looking at 9 months ahead.
Yeah, so what will happen is this segment is not going to do well. Now a lot of analysts are building in this segment not doing well. So to that extent, it will be poor performance which is known. So it's not really going to disappoint analysts, but it's the performance continues to be poor. The factors for the market are, so do you take this performance and say I don't like these stocks, should the stock sell off? The answer is they probably won't sell off if we've had by then a good government which has started talking about reforms, if there's hope that at some point interest rates will start to ease off.
In your interaction with the foreign investor community, Jyoti, what's the sense you're getting? Is it a long-term interest in the Indian market that's picking up, or is it just the hot money, the tactical money that's chasing India based on the trigger that we have?
So I would say it's both. So basically there is a lot of interest coming through in India, and then of course when markets start going up, then some hot money also tries to play the momentum. So it would effectively be both. But see, what we have to remember is there's been an excessive focus on the elections. So it's not just an election story, it's a story of over the last 6 months, India's, economy started improving for the better also. Like if you think of the current account deficit, in July, people were just very worried that we would probably end up with a 4 or 5% current account deficit for this year. We are probably going to end up at under 2%. So that's been like a dramatic improvement in the current account deficit we've seen. Second is if you look at inflation, we are now like at a 2-year or the 3-year low on inflation, depending on whether you want to take the WPI or CPI. So there are some factors which, have improved in the economy, which people are cognizant of and people are playing. So it's been probably a combination of an improving macro and some hopes that post-election we'll get a very reform-oriented government which will be quite stable.
Okay, so what is the sense you're getting in terms of the quality of this or the time length of this rally? There are some people who tell us that we are at the start of a 3 to 5 year rally, and there are others who believe that this is a tactical election related rally. Would you go as far as that to say it's a start of a 3 to 5 year rally?
Like what happens with most rallies is it's where you are in the earnings cycle. So if you look at earnings today, we are probably at like a 18-year lower on margins. So one can think that from these levels, if things go right in India over the next 4-5 years, we probably could see earnings double from the levels we are today. And if earnings double, we'll probably get the market, moving in line with what the earnings have been. So that's what we have to remember, that we need some things to fall into place and then we could get this sort of move coming through in the market. Now if that thing doesn't fall in place, the new government, whichever it is, struggles to do reforms, then we could get disappointed again. But otherwise, most bull runs have started with earnings at the low end of the cycle, and earnings really pick up after that, and you get some re-rating coming through also.
What are you working with in terms of an earnings growth for FY15? And how much would you bet are the chances that you will have to upgrade them?
So, FY15 I don't think is going to be the year of the big turnaround because again, any government which comes in, by the time they get the act into place, they start working, you're halfway through FY15 already. So today if you look at consensus numbers on FY15, it's a 17% growth. My view is that that number will get downgraded. So it's, typical start of the year, we come with very optimistic numbers. I think it will get downgraded partly because the sectors which have done well in the last 1 year have all been the rupee sensitive sectors. If we don't get rupee, I think rupee probably will remain stable for this year. So then that additional push we got from rupee depreciation will not be there on earnings.
Okay. So for specifically for Q4 earnings, Jyoti, as we head into the earnings season, which are the 1 or 2 pockets that will deliver good earnings this quarter and pockets that one could buy into ahead of earnings?
So, like the pockets which will deliver good earnings are the sectors which have done well all these years also. So, there's no real great surprise in them. But I guess, the private sector banks is something you can still buy because they'll deliver good earnings. And you'll also have a good outlook for the future for the private sector banks. Again, autos, is one segment where you could see earnings being quite decent and, probably earnings accelerating into next year. So those are the 2 segments I would highlight.
Okay. Jyoti, so far, at the moment at least, it looks like the global scene is not going to bung any Molotov cocktail. But what is your sense? Do you think we are going to have a benign global scenario for a better part of 2014?
I think in some sense market has taken this whole tapering quite soberly, so market was not got overexcited about it. What we'll probably have by the end of this year is a much higher US interest rate than what we've seen over the last few years. So that's something to be, cognizant of, that rates will be higher. What you're hoping is that as rates increase, we'll also have at the same time growth picking up. So, India normally is part of a global cycle. So if global growth picks up, India's growth also tends to get that impetus. So if we have higher interest rates accompanied with higher growth, then I think, we will not be really concerned about the global scenario. In fact, it would help us positively. But if we have higher interest rates and global growth does not pick up, then that's where, you know, there could be some periods of bitter volatility.
Okay. A lot of people are now
I think,
talking about...
just
Okay, that's Rahul Gandhi, I think, going in to vote over there. We just saw Sonia Gandhi a while back, and that's Rahul Gandhi just entering to cast his vote. But talking about politics, Jyoti, a lot of people are now, cautioning us about the possibility of a fragmented coalition and how you should approach the markets if that comes through. What kind of a downside do you see if we don't get what we want, or rather what the market wants? And in that context, how do you approach sectors? Would you advise being defensive then?
Okay, so, you know, like if we take the last two elections, they provide us some template, right? Because in 2004, people were expecting one government. They got a government which was totally different. The markets in that first 1-2 days went down like 15% plus. And then after that, if you see the next 5 years, it probably produced one of the best returns we've got in any government. So, you know, there are some expectations in the market, and whenever those expectations are not met, market typically has a panic reaction on that event. So even in 2009, people were expecting a, not such a great government. We got a government which seemed to be more stable, and the markets went up like 20%. So, you know, those event days typically turn out to be very volatile, but they're not necessarily the right signal which you get from them. So a fragmented government initially will lead to a bit of sell-off, because at the moment, all opinion polls are building a scenario where we'll get a very stable government. And we'll get a sell-off, and then it is, what sort of government we get and whether they're actually able to deliver on reforms or not.
So when you say a bit of sell-off, what does a bit indicate? Is it 5 to 10%? Could it be more than 10%?
See, it could be 10% if we don't get a sell-off from now to, the election day. My sense is probably, people may want to take a bit of money off the table ahead of elections itself, because we've had a nice run in the market. We are like up nearly 20% in the last 6 months. As you get into elections, you get a bit more wary that will these opinion polls come out to be right or not, and people may want to take a bit of money off the table. So yeah, we could see markets being down 10% plus if like the opinion polls are totally down, and we get a totally hung parliament which, scares people.
Okay, finally one question on a parameter which perhaps will not change so much with the colour of the government. How do you expect the 10-year yield to move? It's been elevated at 9%. What does the year look like?
Yeah, it's been quite sticky at 9% plus. Our guess is as we move into the year, we'll start seeing the 10 years come off a bit, and we probably expect it to end up somewhere in the 8 to 8.5% range for the best part of the year.
This factors in a rate cut?
Yeah, this factors in. We'll probably expect a rate cut very, very late in the end of the year, probably, something like December. And we hopefully will get that if inflation continues on its downward trajectory.
All right, Jyoti, thank you very much for joining us with that 360-degree perspective on the Indian stock markets.